Good morning, traders and investors. Today's Wednesday. It's March 22nd. We're slowly entering the last week of March, just a few days from now, before the end of this week. It's Wednesday today. It's about 7:52 in the morning. I'm getting a little bit of a late start by about 10-15 minutes. The market's going to gear up to open up in about, an hour and 38 minutes to be exact with you. Now, as you can see here, the Nasdaq is down just a few points. The Dow is up a little bit. This is total and utter randomness. Most folks today are waiting for Mr. Jerome Squirrely Powell to talk about the Fed announcement, and he'll give us a briefing of what he expects. We also have a petroleum status report, so you do have to watch for the energy market, which has been rebounding with the banking fiasco softening up in the last few days. As I predicted, and I was 100% right, forget about this banking fiasco. It's behind us. We need to move on. We need to look somewhere else. We need to look for some other drama. I don't know if Trump is going to get arrested. He didn't get arrested yesterday. The markets were standing by on that as well because that could impact certain stocks, but nothing happened. So as far as I'm can tell, the only major catalyst, the big catalyst for stocks is going to happen in the afternoon. So we may see some subdued trading session till that time. Keep your eye on the bond market. Now, the bond market is in a very precarious position right now, and let me explain to you why. There's an over 80% chance, there's an 85% chance that's priced into the bond market that the Fed is going to raise rates 0.25. When you have such a huge number, over 80%, that means it's mostly priced into the value of the market. So I don't think the bonds are going to have as strong of a reaction as possible. And also remember, bonds were artificially raised higher into this range after the banking fiasco began. So right now, bonds are a little bit overbought to begin with. But again, we don't know how Mr. Jerome Squirrely Powell, that's what I call him, Jerome Squirrely, that's my best name for him, Jerome Squirrely Powell, is going to react and what he's going to say. That's going to be the big key. I think what he's going to do is pretty obvious, but I think what he's going to do is I think he's going to play down the banking crisis, calm people down, and he's going to be treading extra carefully today in comparison to how he usually does. Now, let's talk a little bit about market action so I can tell you what's going on, how it's impacting everything, and what we've been missing last few days if you haven't been around. And by the way, for anybody who doesn't watch these videos, you could find them in the YouTube Wealth Press channel. There's a Telegram link. Subscribe there. I give some free bonus trades there sometimes. And last I checked, I think we've had 14 for 14. Now, they're all not all of them are bonuses, but we do give some crannies, nooks and crannies for you guys who want some tidbits on certain stocks. So let's get into the analysis, and I'll get into more of this later. But please like, subscribe to this channel, and post comments and feedback. 3 major U.S. benchmark indices finished the regular session higher as concerns about contagion among regional banks eased and investors braced for the Federal Reserve decision. That's what's on the table today. In Tuesday's session, Wall Street main averages closed sharply higher, with the benchmark S&P and blue chip stocks notching a 1.5-week high, and tech-heavy Nasdaq posting a 6-week high, which is beneficial for the market because there's lack of negative financial news. Financial stocks continue to stage a recovery. Let's not hold our breath. Let's see how it all washes out. Stay away from them for the time being. Don't try to be an eager beaver and bottom pick them right now. Wait for them to stabilize. First Republic Bank surged 29% after Mr. CEO Jamie Dimon, who hangs out with Jeffrey Epstein. We don't know that for sure, but there's a couple of talks about that, who's in talks with chief executives of other big banks to stabilize the troubled bank. Energy stocks also gained as the ground of crude oil rose on easing fear of a global crash. Because anytime you have a global financial fiasco, energy prices are going to be. Energy is very sensitive to a recession, not to inflation, to a recession. Tuesday, existing home sales jumped 14.5%. To a seasonally adjusted rate of 4.58 billion, blasting through estimates and snapping a 12-month losing streak, but we're still down over 20% from a year ago. I don't know if you guys seen that or not, but just want to show you what the numbers really are because it is kind of important, and you need to see this. And look at that. Year over year, prior was down 36%. We're down 22%. So the number's better than expected, but we're still down 22% from a year ago. So just something that you need to keep in. That's why it's important not just to trust the headline. all eyes today are focused on the monetary policy decision later in the day, where futures have priced in an 87.8%. See, it's not even 80, it's almost 90% of a Fed raising rates by 25 basis points for a second of consecutive time to close to 5%. I told you they're not going to peak out till we get well into the upper fives or maybe even lower six. In addition, market participants will closely monitor Fed Chair Jerome Squirrely Powell's statement and a new summary of economic reports. Now, here's a comment from somebody from UBS. They say, we expect Powell to strongly argue that banks are safe, sound, and well capitalized. He's not going to rock the boat this time around. He's going to be pretty positive. He's going to spin things the right way. He does not want to create more fiasco. We expect committee not to pause, and risk signaling a banking system cannot withstand a 25% rate increase. And I agree with him 100%. He's gonna play it really close to the vest. He's gonna make sure to do everything possible to rally this market. And again, the 0.25 is already priced into the bond at 87.8%. So I'm not expecting a huge move on the underlying unless he says something really, really shocking. Bank of England meets on Thursday and is widely expected to raise rates by 25 basis points to 4.25, with the latest inflation print increasing the pressure on central banks to go further and consider 50-point move. Now, China lagged in Asia's peers today and closed slightly higher. Chinese stocks rose for a second day, everybody's recovering from this U.S. banking fiasco. That's really the key. Let's hope we can continue moving down this road. At the same time, Japan closed sharply higher, catching up on gains after the market was closed on Tuesday for holidays. The index's upward momentum was primarily fueled by gains in beaten down financial stocks. That's where all the action is right now. That's what everybody's focused on right now. But they should be actually focused on other sectors because I think the banking fiasco is behind us. Like right now, I would be really focused on, if I was them, I would be really focused on XLK, which is the technology sector, looking like it's starting to peak out around these levels. But we'll see. Maybe it'll break out. Maybe there's something I don't know. And again, the Fed could surprise us as they've done many, many times. As far as some interesting tidbits, GameStop surged 40%. I thought that whole meme stock was behind us, but I guess not. But that's a positive sign. That means market participants are starting to come back again and speculate, which is really good for small cap stocks. And if you look at small cap stocks, I just want to show you something. They have not been impacted all that much by this fiasco. Look at this. Same thing. Let's just extend this line. That's a very positive sign for the overall market and a positive sign that we are in fact, or we have in fact, bottomed out unless something really crazy happens, like another banking fiasco or something really unforeseeable. We can't predict the future, but based on what we're seeing, things are stabilizing. Now, Nike dropped more than 1% in pre-market trading after the company reported upbeat third quarter results, but guided gross margin at the low end of the forecast. And Nike's a huge consumer discretionary company. So if they're not doing good, which consumer discretionary stocks are going to do good? Today, we've got earnings from Chewy, the online pet store company. A lot of people subscribe to that, and KB Homes. There's not a lot of earnings, but these will be the ones that we will see today. And tomorrow, we got General Mills, which we're actually long right now in one of our programs. Now, talking about the economy, as I mentioned, the big news today is going to be the petroleum, the FOMC, and what Mr. Jerome Powell is going to talk about. In terms of the futures, I think we're going to see some stability and some low-hanging fruits. Now, a few people asked me yesterday why I got out of the utilities. Utilities went down and we got out of them, and then they went back up. The reason we got out of utilities is because of the way bonds are reacting to the current market environment. Remember, there's a strong correlation between bonds and utilities because, look, if bonds go down, interest rates go up. If interest rates go up, that's bad for utilities because most utility investors buy utilities for the yield, okay? So again, I explained this yesterday, but I just want to explain this today. So there's an inverse relationship between interest rates and utilities, and there's an inverse relationship between bonds and not inverse relationship. There's an inverse relationship between bonds and interest rates, and there's an inverse relationship between interest rates and utilities, which means utilities and bonds move the same way. And after seeing yesterday's trading action, I was thinking to myself that bonds are already pricing in most of what we're seeing. So the bond market may actually not go down. It may actually go up if they're already pricing a 0.25 rate hike. Now, they're down a little bit for the day, but again, we haven't had the meeting yet. So there's a good chance we'll actually get a little bit of a relief, which may cause utilities to rally, because that may show that interest rates are not going up. Because look, if it's already pricing in an 87.5% chance of a 0.25, and the only other scenario is no interest rate hikes, and he's probably going to say how things are stable and how good they are, that means bonds could actually go higher, not lower, right? And if that's the case, because remember what happened with bonds when the banks started crashing? They went up to give us some relief. He may actually give us more relief and tell us how stable they are and tell us how good everything is. And that may cause the bond market to actually rally. And that's why I didn't want to be short utilities. And also seasonally utilities and several utility stocks showed that they go up today and not down. So that's a very, very, very major factor. Now, in terms of sectors, technology is no longer leading. Communication services is leading, and I'm expecting technology to drop further. I think consumer staples is going to pick up. I think basic materials is going to pick up. I think healthcare is going to pick up. I think energy is going to pick up. And I think utilities may start coming up because we may not be in an inflationary market that much longer. And if bonds start rising a little bit, utilities will get a lift too. We definitely need some upside for financials. So I think non-technology stocks are going to be rising and technology stocks are going to be choppy. Now, if we see a rally in technology stocks, that means bonds and interest rates are stabilizing, and that's a very, very good sign for the market. Now, you may want to rewatch this, but again, inverse relationship between bonds and interest rates, and same relationship between bonds and utilities, which means bonds have an inverse relationship to interest rates. So bonds and utilities have an inverse relationship to interest rates, which means bonds and utilities move the same way. And if we're already pricing in what he's expecting, and if the next level is zero, we may see a reaction of the bond market actually getting some relief out of this, and interest rates not going higher, but actually going lower. Now, today is Wednesday, and on Wednesday, what do I like to do? I like to give you some long plays and short plays. Now, usually I give you one actionable trade idea to the long side and one to the short side, but I'm going to give you 3 actionable ideas to the long side today and 2 to the short side. And no, it's not Dish. Dish isn't ready yet. It's still, Dish is a dish that's served cold, and it's not there yet. I'll show you in a minute. This is one stock that I'm really loving right now. My suggestion is put this with your quantum indicator. If you don't have the quantum indicator, just use a 5-day RSI. It's the cheap version of real cheap version of the quantum indicator, or maybe even a 2-day RSI. But I like the quantum, and wait for a short pullback and continue riding this baby. The other stock, and we've done this already twice in the last week. GE, same thing. Wait for a slight pullback and get in on it. Get in on it. Look at that right here. See that? Goes down, hits it, and then we go back up. Now, the quantum indicator is a lot more sensitive than this. And no, I'm not trying to sell you the quantum indicator, but the quantum indicator will find pullbacks like this, not all the way down like this. And they happen a lot more often, and then you just strike on these stocks. So these are all strong stocks. Another one, MPC, Marathon Petroleum. This one looks like it's ready to break out and go higher, and this is the strongest energy stock. And I think it's met its base right here. So I think if we get a little bit of a relief or a reprieve from Fed chairman, we're going to see upside in the petroleum stocks, especially Marathon and maybe even XLE, which is the entire sector, which has been actually firming up pretty good in the last couple of weeks. I think it's found its bottom. And also, on a sentiment level, look where energies are right now. Again, I'm just trying to connect the dots and get you guys on the right side of the market. Look at this. Look at where energies are. So I'm not selling energy. This is not a time to sell energies. Not at all. You don't want to short energies right now. Now, 2 stocks to the short side. Yes, Fidelity National Systems. I think this is just going to come Let it ride a little more, maybe to the 55 level, and then sell it. I think it's going to just continue going down. It's a crappy company. And then Match.com, the dating app. I don't think a lot of people are using this. This been around for almost 30 years. But I think folks are using different type of ads. It just doesn't seem very popular. And if it couldn't rally in the last couple of weeks on the upside we've seen in the market, I mean, this thing's been going down since January 31st, and the market's been fairly stable. I don't think this rally's going to hold itself, but you may want to wait for the RSI to come up to 70. Give it up to the $40 level. Don't rush. Give Fidelity up to the 55 level and give Match up to the $40 level, and then sell the living pants out of this thing. Now, folks, before I go, my good friend, really good friend actually, I'm having dinner with him tomorrow night. Chuck Hughes is about to expose one of Wall Street's best kept secrets. It's a new way to potentially get ahead of the game, and I really mean that. I'm so excited about this. I'm very proud of Chuck for releasing this to the public. The way Wall Street invests is changing, moving all of its biggest transactions to a certain hour of the day. And while they've kept this secret buried for months, even years now, Chuck and I are going live at 1 p.m. Eastern Time to pull back the curtain and reveal how the rest can target these power hour stocks. Follow the link below if you missed out. We're going to have a special session. We may even give a freebie trade today. There's going to be some good announcements, and we're going to be doing it right around the time the Fed chairman is speaking. So maybe we'll tune out for a second and tune in and kind of give you commentary in real time. You do not want to miss this. This has been one of the most popular programs, if not the most popular program this year in Wealth Press. I mean, we've been just selling this thing like crazy. You want to check it out. You're going to get some tidbits. Even if you don't purchase, follow along. You'll learn you'll get some value out of this. You'll learn some statistical and some seasonality plays that are very, very cool. It's happening today at 1 p.m. Eastern Time. We've been keeping this secret. Chuck's been keeping this secret buried for months now, even years now. But Chuck and I are going live today. It's Wednesday, the 22nd of March. Live, no Memorex. We're going to pull back the curtain and reveal how the rest of us can target these power hour stocks. Follow the link below. Check it out now. And if you're watching on the YouTube Wealth Press channel, there's a link below this video. There's also a link to my Telegram channel where somebody by the name of Uncle Roger gives you free trades sometimes. And remember what I always say. This is the most important part for today. No monkey business. No monkey business. All right? Zero monkey business. Bye, guys. I'll see you at 1 p.m. with Chuck live today. Bye, and have a great, great day. Comment, feedback. I want to hear from you. Bye.